TCS results are surprising to a lot of people. In a way, it's a mixed bag. So far the commentary that has come in for IT Pack, Suyash, is it's going to be a washout, it's going to be better than expected. What do the results tell us to begin with?
As you correctly said, Shweta, it has been a mixed bag. And if you look at the stock also, Shweta, the TCS stock was near its 52-week highs earlier this week. And, the expectations of a muted result did affect, the stock prices. And we saw some pullback there. In fact, even today, the stock is down about 1.5% or so. But before we talk about the hits and the misses, the good and the bad, let's look at the, the headline numbers for TCS. Now, if you look at TCS's Q2 earnings report card, yes. So revenue saw about a 0.5% jump on a quarter-on-quarter basis. It came in at 59,692 crores versus 59,381 crores in Q1. Net profit was around, saw a spike of about 2.42% from 11,074 crores to about 11,342 crores. Also, the net operating profit margins showed a good improvement, Shweta. It improved by about 110 basis points on a quarter-on-quarter basis to 24.3% in Q2 versus 23.2% in Q1. Now, let's talk about what was the good and the bad from TCS's results. Let's look at the hits first. The net profit figure has beaten estimates, and it came in, the expectation was of about a 0.8% quarter-on-quarter rise, but the results we saw a 2.42% rise. Operating margin, Shweta, also has seen, as I mentioned earlier, a good bit of bump up. Now, this is on the back of cost optimization efforts undertaken by the company, and also we have seen that it has recovered from the wage hike cycle, which was a pain point for the company's margins in Q1. Order book also remains strong. Now, TCS's order book came in at the total contract value of about $11.2 billion. Now, this was mostly in line with what the street was expecting. But we also saw a good uptick from the BFSI segment, which is a major contributor for TCS. And, it is the second highest total contract value on in a particular quarter. Now, let's also talk about what was not so good. Before that, let's also look at the attrition rate. Attrition rate has come in, about 3% lower on quarter basis. On a year-on-year basis, it has declined by 6.6%, which is a 660 basis point correction. Also, if we look at the misses for this quarter, revenue growth, Shweta, was a major disappointment for the company. In Q2, revenue growth fell short. It was expected to be around 1.3% on a quarter-on-quarter basis. It came in at around 0.52%. Although the attrition rate came down for the company, the head count for the company went down by about 6,333 people. Now, if you remember, back in Q1, TCS was the only company which saw a rise in the head count. But this quarter, we have seen a decline of about 6,333 in the total head count of the company.
That is as far as hits and misses is concerned. Let's quickly get in Devang for, what were the biggest hits as, in your assessment, Devang? Revenue in line with estimates, closely in line with estimates, but missing the guidance and missing what the company was expecting. 1.3% comes at 5.52%. Not a big bummer there, is it?
I think more or less the results were on the expected lines. Yes, I think the revenues were quite in line, as you rightly said. A good surprise was a slight bit of expansion in terms of margins. The deal wins as well as across the geographies, I think whatever they have won, whatever order bookings they have done, and whatever the order flow has been, it's been a robust pipeline of orders as well. Yes, we all know that there is going to be a slowdown, exactly an expected slowdown across geographies in Europe as well as in US. So ideally, yes, the management body language and commentary was not as such very weak. But you can't expect a sort of a bumper type of quarters for the next 2-3 quarters at least, and on a high base for companies like TCS and Infosys to deliver some great sort of numbers would be difficult. But my sense is that the correction that the IT sector went through is sort of over. The valuation correction also has sort of happened. Now probably from here on, it would at least be a market performer, if not a outperformer.
All right. And before I let in Suyash come in, as far as attrition is concerned, because that's the story in the IT sector we've been tracking, although attrition rate is down, the headcount is also down by over 6,000 people, which essentially means no new hiring in second quarter.
And given that the company has seen such massive deal wins, all the deal wins are, these contracts are long duration contracts. So, to carry out those contracts over the next few years, you need not only to retain the talent but also hire new people.
Devang?
Yes, exactly. So I think probably they in one quarter it sort of should be a blip. Attrition coming down is one, I guess, a good thing. Yes, they are not probably headhunting, or the recruitment has not been so strong. Yes, that probably could be a little bit of a blip this quarter. But my sense is that yes, the type of deal pipeline there with the long-term contracts that they have won over the last 3-6 month period, and also the visibility towards that will surely they would probably have some pipeline of people who would be joining them. So I don't think this is a huge negative as such, and also I feel that markets wouldn't behave irrationally as such, because TCS has also announced a buyback at 4150, which is quite a high price from the market rate which it is right now at, and these companies have a lot of cash sort of where they reward the investors with either buybacks and good dividends.
Now, Devang, we also saw there was a report that, in fact, TCS itself said that 250 of its employees are currently stuck in Israel. Do you think that, news factor to have a sentimental impact on the stock prices?
I think, Suyash, that impact, if it was about to come, would have sort of come early in the morning as well. So I don't read too much into it. Of course, probably the safety and security of those 250 people is of utmost importance rather than the market behavior. I don't think there would be any sort of problem, because there are sort of thousands of employees which work with TCS, and how much is sort of the Israel a part of this global revenues that needs to be seen. But I don't think there will be a huge deterrent for the stock.
Now, before we move on to buyback, I also want to touch on the result expectations of Infosys and HCL. Any inferences that we can draw from the results of TCS? Any sneak peek that you can give us?
Ideally, I think, most of these results will be more or less in line. Ideally, some of them would be around, say, 0% to around 3-4% type of constant currency type of growth, which they would see in. I'm more wanting to know what the management comments about the next couple of quarters. Of course, the market probably does not read much into numbers because it's already done, right? So it would be sort of a reactive move on the stock on the back of numbers. But I think what the management speaks about, whether IT is slowing down, whether the BFSI sector there is slowing down, the answer seems to be no. There can be certain problems with telecom as well as retail sector. I was reading a lot about the retail sector. They're probably slowing down, that there is an inflationary trend which still is sort of prevailing over there. And we know that higher for longer interest rates are also the flavor of the season there. So I think a little bit of slowdown, if the companies talk about in the retail and telecom vertical, there would be a little bit of jitters for some of these businesses. But ideally, as I said, more so wouldn't like to speculate on the numbers. Want to listen to the management commentary, the transcript very carefully, word by word, reading between the lines, and that's where I think we would take our call after the earnings are coming.
Now, also looking at the order win, TCS's total contract value at the end of the Q2 stood at around $11.2 billion. Does it give you any sort of confidence that, heading into FY25, perhaps we can see, the entire IT pack seeing a double-digit growth, which it was on before the last few quarters?
I think yes, I feel a little bit energized when I look at decent type of numbers from this table, when the commentary is not so weak. This sector has sort of earlier underperformed. If you look back 1.5 year back, it has sort of underperformed the broader markets. I think last 2 or 3 months it's outperformed the Nifty very well. And my sense is that if you want a sort of an exposure to sort of global markets, a company IT services in India is sort of a companies with durable competitive advantage. I don't think that one can ignore if somebody wants large cap businesses in the portfolio. These are sort of businesses you go to. Of course, you can't can't be the best timer. But the sense one gets is yes, they are on a decent trajectory, and once this slowdown recession things calms down in the next 2, 3, 4 quarters, hopefully, I think things would sort of get smoothened out for this sector as well.
All right, and when do you expect things to smoothen out over the course of next 2, 3 quarters or starting next quarter? I mean, talking about the deals and the contract book for all companies, we've been discussing in and out over the course of last 2 days. When the order book looks that lucrative and the deal size is becoming bigger and bigger, when do you expect it to show results? Maybe next quarter, or we'll have to wait for a couple of more quarters?
I think the trajectory seems to be on an upward side. Why I would reserve my comment for this, because what we want is not only a good deal pipeline as well as good order execution, but also at a decent margins. A compromise on margins never sort of excites the market participants, and of course it's a huge deterrent for the business as well. So if there is a competitive intensity where companies sort of crack their margins and garner business, they need to do it sometimes. But ideally, that's not the best scenario that we know, because see, ideally, if you want a volume business or you want a margin business, and the combination of both is great for the market, right? That's what you call a durable competitive advantage business. So the sense one gets is that if the margin also comes back, which we saw this quarter, it should not be a one-off quarter where we see this phenomenon. But if the margins are also maintained along with the order wins and the deal wins, I think that's where we would sort of want to be a little more constructive on this sector.
Now, Mr. Mehta, talking about the buyback of the, that the company has also announced, it has announced a buyback of about 17,000 crore at the price of 4,050 per share. Now, the overall size of the buyback is lower than what, the company had announced back in January 2022, and the offer price, like the buyback price, is also lower. What do you make of it?
I think, see, it's higher by 15% than the yesterday's price. It's at 4150, 15% higher than the price which it commands in the market right now, or rather on October 11, is not a bad sort of pricing for anybody who wants to sort of give in. But I think again, most of these companies, we have always seen that the earlier buyback was somewhere around 3,200, if my memory serves me right. Most of these companies crossed their earlier prices. Just a case in point, right? L&T had earlier announced a buyback around 3,000, and then it sort of revised its buyback price at 3,200. The stock already would be somewhere around 3,100. So I think good companies, when they announce buybacks, it shows positivity amongst the management. Yes, also the equity gets sort of wiped out in a way. So my sense is that the buyback is at decent prices. Also encourages the investors, sort of long-term investors, those who are not willing to give in buyback. They also know that the company is doing very well, so the management is confident to take shares back at 4150. So I think it's a positive. I don't read much a negative print into it.
Now, Mr. Mehta, the company has announced, around 5 buybacks in the span of 6 years or so. And, when typically a company announces a buyback, it's either because they think that the price of the market price of their shares are undervalued, or the second line of thought could be, they are lacking that, investment opportunities. What do you think is the case here?
See, I'll clearly demarcate it from this, because the second option which you talked about, they don't have many sort of cash using opportunities, if I put it that way. I think IT companies either make some inorganic acquisitions, which some of these companies have been able to do. They have sort of been successful in doing that as well. But most of these IT companies, FMCG companies, they create a lot of cash. I think there's a good strategy to give it to investors back, that look, we are confident that our business is doing well, and over a period our business will sort of do well. So my sense is that it's more of IT companies or FMCG companies, whenever they do buyback, whenever they give good dividends, it augurs very well for the investors. Whereas a capital good companies, an infra company, they would sort of use their cash for other projects, and sort of their internal accruals also they would use for expansion of projects or do capex, which I don't feel is right now the case with IT, which is sort of again envisaging a slowdown across the global markets or the geographies where it serves. So it's a good thing right now when there is a buyback, when there is a special dividend, whenever company announces bonus. Of course, I know more of this are accounting entries like bonus, but it sort of serves the investors as a good, confident, positive momentum to stay invested.
All right. And Devang, before we let you go, a lot of results, results awaited will come in the next couple of days. HCL, Infosys. What is your big expectation as far as IT Pack is concerned? Do you agree it's going to be a washout here, or do you think it's going to be a mixed bag?
And what will you be looking from the management commentary as well?
I think IT as a sector probably this is one quarter which everybody is looking at, because there seems to be a positive sort of glimpse into numbers, as we saw a little bit of margin expansion. Deal wins, we all know over the last 1 or 2 quarters have been decent. What we want to hear is across geographies and across sectors in those geographies as well. What are the hits and misses? Whether they are confident of sort of getting more orders, whether they are sort of confident of executing these orders smoothly, also whether they would be able to maintain their margins. I think this answers wouldn't be found in this one quarterly commentary, but over the next 2 quarters, I think the management commentary and the body language as such would be very, very useful to sort of know. So as I said, not much into the numbers, but more into the commentary about the geographies where they are serving, which sectors are either slowing down or which sectors are showing a bit of momentum to come back. That would be the key factors that one would look to watch for.
All right. So margins over volume and geographies over what numbers come out, absolute numbers in second quarter. Also, next couple of quarters to look out for. I think that is, Devang Mehta's commentary on IT Pack. Devang, thank you very much for taking time out, sir. Appreciate you taking time out for joining us here on News 9.